Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live throughout the day from Philadelphia at Nasdaq and Villanova School of Business ETF Synapse, where we're focusing on academia and research in the ETF space. Joining me for this segment, we have Steve Feinour. He's a partner at Stradley, Ronon, Stephens and Young. I don't know how you get that out all day, every day, but it's great to see you again. Thanks for joining us at Synapse. What are regulators focusing on right now in the ETF space? There's a lot of good content coming out of here.
Yeah, absolutely. So a never dull moment in the ETF space from a regulatory perspective. I have a lot going on. Some big things that people are focusing on is one, earlier this year, the SEC proposed an ETF exemptive rule that would enable issuers to come to market with more efficiently, with lower costs, and not have to go through the exemptive application process. And as part of that, they're going to be leveling, as proposed, it's leveling the playing field, standardizing this patchwork of a regulatory framework that had developed over time, and had become a little bit outdated. So, that's a welcome development, particularly with respect to flexibility to use custom baskets. Some other areas of interest, crypto ETFs. So crypto ETF has not been approved to date. Earlier this year, the SEC published a letter that outlined a couple of concerns that they had with respect to investment companies investing in crypto and crypto-related products. Since that time, the industry's been working to address those concerns. There's been some positive developments on the custody front. So that's another kind of big thing that people are focused on. Also, less transparent active. So currently, all active ETFs are required to publish their full portfolio on a daily basis. And this is an issue for some active managers due to free riding and front running concerns. They don't want to, they have the special sauce and they don't want to, have the concerns about giving that away on a daily basis. And so there have been a number of proposals that have been submitted to the SEC and have been sitting there for some time for a less transparent solution. And there's, the industry's been talking about that over the last couple of years, and every year you hear, okay, is this going to be the year that the SEC ultimately approves a less transparent active ETF? But I think there's greater cause for optimism now than at any point there has been in the past. There's a lot of engagement from the regulator. There's a lot of movement towards that front. And one good thing about the proposed ETF rule, once that is adopted, is that it'll free up regulatory resources so that the SEC doesn't have to spend all the time that they have historically reviewing and working on exemptive applications, and they can now use that time and focus on more novel products. And so hopefully it would be have a positive impact on an innovation front.
Well, it's interesting because, and it makes sense for the SEC to really focus on ETF regulation. It's such a big part of our markets. I mean, it's over $3 trillion is invested in ETF markets. So there is an interest that should be out there for investors. Do you think with the crypto ETF, to go back to that conversation, is that a 2019 event, or is there a lot of work to be done around that? Because it feels as if, and I think there was an article in Bloomberg this morning talking about like almost a declining interest of cryptocurrency. You don't hear about it much anymore.
So, I mean, I think it's really hard to put a prediction on that. I think part of it is the regulator is waiting for the market to mature. So we have some of these proposed crypto ETFs would invest in cryptocurrency-related futures contracts. They just started trading at the end of 2017, and so it's that hasn't been out there for that long. They still have they have some concerns over fraud and market manipulation, and how these assets would be custodied now for cryptocurrency-related derivative instruments and holdings. For ETFs that would invest in those, they don't pose the same types of regulatory concerns because there's already an existing regulatory framework that's set up to accommodate that, as opposed to direct investments in crypto. But I still think it ultimately comes back to the point where that they just want to give the market more time to mature. And there's some arguments as to whether a lot of the crypto it's in the retail space right now, and if you would enable a crypto ETF, that would institutionalize it, and that would bring about all the things that the SEC is looking for, whether it's trading volume, less potential for fraud or manipulation, more security around the instruments. So it's a little bit of a chicken and the egg scenario, but mean, that's where we're at right now.
All right. Well, thank you so much for joining us in Philadelphia today. And thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter.